Hey everybody, it's BJ
And Patrick.
and we're back talking all things real estate. And today we're back into the headlines. So,
Well, you know what? This is all around that mortgage cliff renewal. What's happening, right?
okay, right.
So let's jump into it. OSFI is the banking regulator. They are the watchdog.
Yeah.
And they're saying they're flagging mortgage renewals and
Yeah.
real estate lending as top financial risks. So this has been going on and on that we're talking about like
So they're are they saying this to the banks, or
Yeah,
they're telling the banks?
They're telling the banks, these are the regulators, it's the watchdog that looks
Yeah.
after them. And they're basically sounding, well, are they sounding the alarm? Well, there's going to be other consequences because of
So
tightening of people's budgets.
right. So when they talk about the mortgage cliff, let's put some things in perspective. If you got your mortgage 4 or 5 years ago,
Yeah, 2020, 2021.
somewhere in there,
Yep.
you got a pretty good rate. Okay.
Oh yeah, so 2020 before the madness, yes?
Okay, so you got a good rate on your mortgage.
Yeah.
When you renew now, you're going to get what would you have gotten 5 years ago?
You know what? I don't even remember because
Like under 2%?
it was so low that I didn't pay any attention to
Right.
it. And I think by the middle of 2021, was it 2022, when we were starting to get warnings that interest rates were going to go up, my renewal came at the exact time right before that.
Okay.
So like, I was like, oh yes, it went up a little bit, but it's like $100 more a month.
Yeah,
Like it's
yeah.
nothing for me, right?
Right.
So, but you're going to be looking at pretty low interest rates, 2.5%,
Yeah.
under 2%, 1.99s,
Yeah.
and some like variables were
Right.
even less than
Less
that.
than that, yeah. And so now you'd be looking at,
I'm one of those Canadians that lock in.
yeah. So if you're on a variable, but you're looking at coming back in now at, what are we at right now? Is it
The fixed is somewhere like, this is a really good deal. I'm not sure if everybody gets it, but it was like just over 5% for fixed.
okay?
Like
But
5.1, 5.2,
sure.
that kind of
So
thing.
let's just say there's a 3% difference in your mortgage rate.
Yeah, and then the calculation would have been like 50, 60% more in payments.
Exactly. So,
So
we'll just
that's
use
like quite a bit of a
yeah.
jump.
So
right?
let's just use round numbers to make it easy.
Got it,
Okay.
yeah.
So your mortgage payment used to be $2,000.
Yeah, $3,000.
Okay. So your mortgage payment is now $3,000.
Pretty much.
Right.
Yeah, and nothing else has gotten cheaper,
Sure.
right? So,
So-
it's all of like the higher cost of living across Canada,
Sure. So the
carbon
now,
tax, all sorts of things have
Yeah,
added to
yeah.
our inflation, anyways, right?
so when they're talking about the mortgage cliff, that's what they're talking about.
Yeah.
Okay, that's what they're talking about is that those people that are renewing now are coming back in at a significantly higher number than they were at before.
Yeah, in the last or in the next 2 years, I think is where people are looking at the biggest risk of
Yeah.
the next like 2.2 million mortgages
Right.
out of about 5 million current mortgages that are out there.
Yeah.
What else? What else do the bank regulators say here? So Canada's top bank regulator says the biggest red flags on the country's financial horizon over the next year are real estate secured lending and mortgage risks. Okay, we expect that elevated interest rates and market volatility will result in continued high borrowing costs, increased mortgage renewal refinancing risk, decreased consumer spending, and business investment. I think that's the biggest part where
Right.
everybody's going to pull back a little bit
yeah,
on
yeah,
spending
sure.
and be more cautious
Yeah.
on any new investments.
If you look at the example we just talked about, you have $1,000 that you just added to your expenses, so you're going to pull that back from somewhere. In that example, right? So you're going to, there's going to be less discretionary income that you have available to go out to eat or go out to a movie or whatever.
Yeah, hopefully you got all your vacations off your plate and you're satisfied for traveling for a while because we got to save money somewhere, right? I think it's, where's our discretionary spending going to happen?
Yeah. Yeah.
It's going to cut back on
Sure.
luxury items.
Sure. So I think
Convenience items, eating out. Yeah,
yeah.
exactly.
So what they're talking about here is they're telling the banks, here's what's coming, or here's our projection. It's not that the banks don't know this.
They know that.
Yeah. Yeah. So
So to continue on, I don't want to read the whole thing. Just let's get
Yeah.
the highlights. There's signs that higher mortgage payments are taking up a larger part of some households' income, leading to increases in number of borrowers not being able to make payments on other loans and debts. And we're seeing that with credit card debts right now.
Credit cards and car loans. That's what
And car loans.
Yeah, I just heard this actually in a report that they're seeing more of repercussion with credit cards and car loans.
Yeah, so
because they seem to go first.
it's certainly, I think that's one of the easiest ones, like credit card, like, oh, a little bit late on that, and then, you miss a payment, whatever the case may be, right? But you need your car to get to work, but you don't always need that car, especially if you just upgraded, and now that's where I think people are going to feel the hit the most on their car loans first before that renewal comes.
Yeah,
but
certainly.
I'm not watching the used car market, but
Sure.
I haven't noticed it flooded with really expensive trucks or SUVs like when the market adjusted last time, 2008, 2009.
That was in Fort Mac. Everybody was selling their
Big Dodge diesel
their
turbo
trucks
things.
and their sleds and
here
their
too.
boats and
Here too, like condo buildings, all of a sudden we had 6 stories of parking, concrete, and it was like Stonehenge for more until now.
Yeah.
15 years
Yeah.
later, and now they're rebuilding some of the things.
I was still in Edmonton at that time, so we saw it.
Yeah, that's how
in
you
a
saw
big
it.
way back there. Yeah. So
Of course, funny enough, the luxury cars didn't really go. They came down in price slightly, and now they've all recovered.
yeah,
But that's not going to be affected the same way.
100%.
And the high end market for homes, that more than above average price. If it's $1.5 million, $2 million, it doesn't seem like there's as much turnover happening at the moment.
Yeah, and they're not as affected by, in general, they're less affected by what's going on in the economy. I know that's a very broad generalization, but
for the most part, that's true.
Yeah.
So there we go. That's what.
So what's that?
OSFI is giving us a big warning.
So what does that mean for? I guess everybody. It's nothing we didn't know about, haven't heard about, and all of those things. I think the one thing that I would say is if that's you and you have a renewal coming up, and we've said this before, is don't wait to go and talk to your bank about your concerns and about how can we make this work and what does this look like and all of these things. Have that conversation with your lender because your lender wants to work it out with you.
Yeah, and maybe that requires looking at your budget and sacrificing certain things, or exactly, sacrificing certain things to maintain that home ownership or not getting behind on payments. Not that I think it's a huge problem in Canada. Canada has a very good history of making their house payments. Back in 2011, we had a little bit over 4 million mortgages.
Yeah.
And that was about 18,000 delinquent mortgages at the time.
Yeah.
That was the highest we've seen. Before then, it was less mortgages. Right now, we have about 5 million mortgages. So we have a little over 1 million, about 1 million more mortgages than 2011.
Right.
We have half the amount of delinquencies at the moment.
That's good.
So, and we've already started to go through the renewal period.
Yeah.
Not everybody's on a 5-year fixed. Some people are on 3 years, so they renew at different times. So it's not exactly 20% renewals of all mortgages.
Yeah,
sequentially.
And I guess the other part of that too is, and we've said this repeatedly, is the world is not ending. The sky is not falling. The Leafs didn't win the cup this year, so we're, it's not the end of the world.
And the Canucks didn't win. I have to cut my hair now. That's it. They're out of the playoffs.
Is that it?
It's time for a haircut.
I'm an Oilers fan, so I'm good.
When I was in the Navy, we grew our beards.
For the playoffs.
Yeah.
Yeah.
So, not everybody, obviously, but
Right.
silly things because it's stuff we could get away with while we were sailing, right?
Hey, thanks for joining us today. Hope you got some good information out of that. Please take a minute and like and subscribe. It helps us out with getting the word out there. If you know anybody who you think needs to see what we're talking about, please let them know about it.
And of course, if you're thinking of buying or selling real estate in the Greater Victoria area or anywhere on southern Vancouver Island, you can get a hold of us. Our information is in the description below, and we'd be happy to help you. Thank you so much for watching, and we'll catch you in the next video.
See ya.